Good evening. And tonight we're focusing on Japan's ambitious plan to bolster its defense capabilities. To achieve this, the government has decided to implement significant tax increases, impacting both corporations and smokers. These measures are projected to generate an additional 1 trillion yen annually, a move that has sparked debate across the nation. Starting in April 2026, Japanese corporations will face higher tax obligations. This decision reflects the government's commitment to securing the necessary funds for its defense program. In addition to corporate taxes, the government is also raising taxes on tobacco products. This move aims to discourage smoking while simultaneously generating revenue for defense spending. This two-pronged approach underscores the seriousness of Japan's commitment to strengthening its national security. The decision to raise taxes has not been without its critics. Some argue that increasing the corporate tax burden could hinder economic growth. Others express concern that the tax hikes might disproportionately impact lower-income households. Despite these concerns, the government maintains that these measures are essential for ensuring Japan's safety and security in an increasingly uncertain world. The tax increases are projected to generate significant revenue for Japan's defense budget. This funding will be crucial in supporting the modernization of Japan's military equipment and expanding its defense capabilities. As Japan faces growing security challenges in the region, these investments in defense are seen as essential. In addition to the defense-focused tax hikes, Japan is introducing changes to its income tax system. These adjustments primarily involve raising income thresholds for dependents and certain deductions. The goal is to provide some financial relief to families and individuals. One significant change is the increase in the annual income threshold for dependents aged 19 to 22. This means parents can claim them as dependents for a longer period, potentially reducing their tax burden. Furthermore, the tax-free annual income threshold is also being raised, providing a small benefit to a wider range of taxpayers. These adjustments aim to alleviate some of the financial pressures faced by Japanese families. These changes, while welcomed by some, are projected to reduce Japan's fiscal earnings by hundreds of billions of yen. This reduction in revenue comes at a time when the government is actively seeking to increase spending on defense. Balancing these competing priorities represents a challenge for policymakers. The changes in income thresholds are expected to have a direct impact on household budgets. While the impact may be modest for some, for others, it could make a significant difference in their ability to make ends meet. Tourists planning to visit Japan will soon encounter a revamped consumption tax refund system. Starting in November 2026, the process for claiming refunds on purchases will change significantly. Tourists will pay the full price, including tax, at the point of sale. Upon departure from Japan, tourists can claim their refunds at designated locations, such as airports. The new system eliminates the previous minimum and maximum spending limits for tax-free shopping, simplifying the process for tourists. It also does away with the separate categories for goods, making it easier for tourists to determine which purchases qualify for tax refunds. This overhaul aims to curb the illegal resale of tax-free goods within Japan. The previous system was seen as susceptible to fraud, with individuals exploiting the system for profit. The streamlined system is intended to be more transparent and easier to monitor, reducing opportunities for abuse. The new consumption tax refund system aims to streamline the shopping experience for tourists, while also addressing concerns about tax evasion. By making the process more straightforward and transparent, Japan hopes to attract even more visitors in the years to come. These tax reforms come amidst a shifting political landscape in Japan. The ruling coalition's recent loss of majority in the House of Representatives has introduced a degree of uncertainty surrounding fiscal policy. The Bank of Japan, under the leadership of its new governor, Kazuo Ueda, is closely monitoring the situation. Despite the political changes, Japan's economy shows signs of recovery. After a period of sluggish growth, recent data suggests a gradual improvement in GDP. This positive trend is attributed in part to government stimulus packages aimed at boosting economic activity. Inflation in Japan is also on the rise, approaching the Bank of Japan's 2% target. However, the central bank remains cautious in its approach to interest rate adjustments. Maintaining currency stability remains a top priority. The yen's value has fluctuated in response to both global economic conditions and domestic policy changes. The Bank of Japan faces the challenge of balancing economic growth with price stability. The recent tax reforms and the evolving political climate add complexity to this task. The coming months will be crucial in determining the long-term impact of these developments on Japan's economy.